So, Dennis, is there a way that someone can get some tax benefits now for gifts that they're going to be giving that occur at their death?
There is some ways that they can give a gift today and then gain an income stream that comes into their bank account for the rest of their lives, and then also be able to benefit the charity when they pass away.
Okay.
So these type of gifts there's two types. There's a charitable gift annuity, and there's also a charitable remainder trust.
Okay. So, yeah, I've heard of charitable gift annuities. Why don't you explain how those work?
Charitable gift annuities is where you make a gift today, you receive an immediate income tax deduction that you can use today.
Okay.
And you then receive income for a period of years that is tax favored, and then you will receive that income for the balance of your life.
So what do you mean by tax favored, though?
That means a portion of the income that you receive will not be taxed.
Okay, so part of it's tax-free.
Right.
Okay.
And you can also make it be for two lives, for both you and your spouse,
Okay.
that this income stream will continue. Now, that usually those charitable gift annuities, you have to have about $10,000 to be able to give as a minimum.
Okay. So you can give more, but 10,000 is the minimum.
Correct.
All right.
So and then
So you with a charitable gift annuity, you give some money, you get a charitable income tax deduction, and then you get a fixed payment stream.
that's correct.
Okay. And then you also mentioned a charitable remainder trust. Why don't you tell us a little bit about that?
Okay, then actually the charitable gift annuity, one of the things about it that people should know is that it is a fixed income stream, so it never changes. And
Okay.
that's one of the strengths that a charitable gift annuity brings. You can say, estimate what your income or your expenses will be during retirement and maybe do a charitable gift annuity that will produce the income to pay those expenses. But one of the negatives about a charitable gift annuity is that the income stream never changes.
Okay.
So if you go into a period of high inflation, your purchasing power will probably be less.
Okay.
Yeah,
So the longer you're receiving the payment, it's going to be worth less because of inflation.
that's right.
Okay.
They work very well in periods of time when inflation is very low or just very or non-existent. But in high inflation, your purchasing power will erode.
Okay, so if you want to have something that's going to give you maybe a hedge against inflation, what would you use then?
Then that's where the charitable remainder trust can be used.
Okay.
And the charitable remainder trust is you need a little higher amount to be able to gift, and that's usually about $100,000. And once you've given the gift, you get an immediate income tax deduction. You will that income tax deduction, if you can't use it all in 1 year, can be carried over several years until you use it up.
Okay.
It also will create an inflation hedge by allowing the value of the trust to increase, and it's revalued every year, and so the payment can also increase if the value of the assets in the trust increases.
Okay.
So it acts as an inflation hedge to create where it will track with inflation and give you increased income.
Okay, so the payments are based on the value of the trust then?
That's correct. It's
Okay.
a percentage of the value of the trust.
And so if the value goes up, then the payments go up.
Right.
But
if the value goes down, the payments can also go down.
Okay, so there's a little bit more risk there.
That's correct.
But it could do well, and especially if you keep the payments low enough, let's say at 5% or so.
Right.
It's not unreasonable to expect that the assets would appreciate at maybe 6 or 7%.
Correct. And your income then would increase as you go through time.
Okay.
And that's by combining these two, you can actually have a fixed income to help you cover your expenses. Then you can also have an inflation hedge that the income tracks with the market.
Okay. So sounds like you have some options there to give a gift now and get that charitable income tax deduction, but then the gift is actually given after you die.
That's correct.
Okay.
The charity in both of these, the charitable gift annuity and the charitable remainder trust, the charity mission of the charity is benefited after you pass away.
Okay, and you receive the income payments during your lifetime.
During your lifetime.
Well, thank you for sharing that.